Hello and welcome. As expected, due to the Thanksgiving holiday in the United States, yesterday volatility was low, about 25-30 pips. Trading activity was subdued as many traders opted to lock in profits and refrain from trading. Today, market volatility is likely to be low as well. Data on Germany's economy released yesterday turned out to be slightly worse than expected. Gross domestic product in Europe's largest economy grew by 1.7% in the third quarter, while the annual reading remained unchanged. However, the news did not affect market sentiment. The GfK Institute said its consumer sentiment index was also weaker than expected. All this indicates a slowdown in the country's economic growth. Such downbeat statistics come as no surprise to market participants, especially amid the coronavirus crisis. From a technical point of view, the levels of 1.1234 and 1.1188 still act as resistance and support respectively. As for fundamental factors, today's macroeconomic calendar is also bereft of any important releases that could have a severe impact on the dynamics of the quotes. ECB members are set to speak. The euro area will report statistics on private sector credit, and the US market will have a shortened session on Friday. Thus, a false breakout at 1.1234 will create a sell signal. In this case, it will be possible to open short positions, counting on the euro's return to area of 1.1188. If the price breaks through this level, the euro-dollar pair will have every chance of hitting the levels of 1.1155 and 1.1118. If the price consolidates above 1.1234, the pair may enter an upward correction towards the area of 1.1273. From this level, I recommend going short on the rebound, hoping for an intraday downward in a movement of 15-20 pips. Speaking of the British currency, the situation is even worse. Yesterday, Burrs managed to drag the price down so that it could hit new lows. The pound-dollar pair fixed below the support level of 1.3315, now resistance. Moreover, everything indicates that the quotes will continue trading downwards, approaching the level of 1.3264. However, amid low market volatility, the pound sterling is unlikely to suffer such a steep decline. If bulls are able to regain control over 1.3315 and the price consolidates about this level, it could spark a stronger upward correction. In this case, the pound-dollar pair will most likely advance to 1.3352. At this level, I think it would be a wise decision to lock in profits and open short position on a rebound with a view to catching an intraday correction of 20-25 pips. Good luck.